Hey everyone, the IRS just dropped the new 2026 retirement numbers, and Roth IRAs got a nice bump. If you've been waiting to supercharge your tax-free retirement savings, now is the time. Today, I'm breaking down everything you need to know about the 2026 Roth IRA contribution limits in plain, simple English, no jargon, no confusion. Let's get you that extra money working for you tax-free. Welcome back to my channel, the finance channel that keeps it simple and actually useful. Hit that subscribe button right now so you never miss these updates. First, super quick, a Roth IRA is the best retirement account most people can get. You put in money you've already paid taxes on. Everything grows 100% tax-free, and when you take it out in retirement, zero taxes. No required withdrawals, and your kids inherit it tax-free too. It's literally free money from the government in the form of no future taxes. Okay, here's the big news straight from the IRS website. Released November 2025. For 2026, the standard Roth IRA contribution limit is $7,500. That's up $500 from the 2025 limit of $7,000. If you're age 50 or older anytime in 2026, you get an extra catch-up contribution of $1,100. That's also up $100 from last year. So total for age 50 plus, $8,600. So under 50, you can put in $7,500. 50 or older, you can put in $8,600 total. That's the most the IRS has ever allowed into Roth IRAs. Now the important part. Not everyone can contribute the full amount directly. The IRS uses your Modified Adjusted Gross Income, or MAGI, to decide. Here are the official 2026 Roth IRA income limits. For single or head of household filers, you can make a full contribution if your MAGI is under $153,000. You can make a partial contribution between $153,000 and $168,000. And you get zero direct contribution if your income is $168,000 or more. For those married filing jointly, you can make a full contribution under $242,000. It's a partial contribution between $242,000 and $252,000, and zero direct contribution at $252,000 or above. For married filing separately, the phase-out is very limited, basically between $0 and $10,000. Just so you see the improvement, the 2025 single phase-out was between $150,000 and $165,000. The 2026 range is now $153,000 to $168,000. That's $3,000 more breathing room on both ends. Same for married couples. You now get an extra $6,000 of income range before getting phased out. If you make too much for a direct Roth contribution, congratulations, you're rich. But good news, the backdoor Roth strategy is still perfectly legal in 2026. You just contribute to a traditional IRA first, non-deductible, then convert it to Roth. There is no income limit. Most brokerages do this in 2 clicks. I'll link my full backdoor Roth tutorial in the description. Quick rules recap. You have until April 15th, 2027 to make your 2026 Roth contributions. The limit is combined, meaning the total between your traditional and Roth IRAs can't exceed these amounts. You also need earned income, like from a job or a business, to contribute. And spouses can use a spousal IRA if one of them doesn't work. Here's why you should try to max this out every single year. If you reach 30 years old and invest $7,500 per year at an 8% average return, by age 65, that could grow to over $1.1 million, completely tax-free. That's life-changing money that Uncle Sam can never touch. So to wrap it all up, 2026 Roth IRA limits are $7,500 if you under 50, and $8,600 if you're 50 or older. There's more income room than ever before, and the backdoor Roth is still wide open. These are the official IRS numbers. I'll put the direct IRS link in the description so you can verify them yourself. If you found this helpful, smash that like button. It really helps the channel grow. Drop a comment. Are you maxing out your Roth in 2026?